All right. Hello, everyone. I am here with my good friend, Jason Greene. He is with Smartwealth in Maitland, Florida, and they specialize in personal financing and insurance. And over the past few years, I've really tapped into that brain of his when it comes to the insurance world and just understanding the ins and outs and, helping me understand what is really needed. And so I wanted to do, a little interview session with him so y'all could hear some great advice and, start with that.
Sure, happy to be with you here. Looking forward to the day where we can all meet in person again. Hopefully it's sooner rather than later, but thanks for having me. I'm really happy to be with you.
Absolutely. And I know you had some kind of components you needed to throw in before we get started.
I did always have the disclosures up front. Everyone should know that, when it comes to personal finance and insurance, on the insurance side, I have what's known as open architecture. So I can use any of the really highly rated companies. I also have a field representative contract with Guardian Life, who is just ranked the strongest in North America, the highest AA plus rating from S&P. And on the investing arm of our firm, I'm a registered rep with Park Avenue Securities. So that, in addition to that, this will be a high level discussion, and all of the information here really can only be relied upon when you are coordinating with, individual professional advice.
Awesome.
There, now we can get rolling and just help people with whatever information is going to be helpful to them.
All right, fantastic. So one of the questions that a lot of people ask, and I saw even someone post this the other day, is like, how much life insurance, do I really need? And should it just be enough to pay off a mortgage? Because that's what a lot of people are asking me. So start with
Yeah,
that.
I get that question all the time. It's a very reasonable question. And the word need is such a difficult word to try to figure out. We really don't know what anyone is going to need. I oftentimes pose the question to my clients, dinner next Friday night, you know, let's imagine that we're allowed to go out to dinner again and you're sitting in a restaurant and you get the bill. Do you know right now what that bill is going to be? We can't really to the very, to the penny try to figure that out. If you're going to take a summer vacation 2 years from now, do we know what the plane fare really will be? Do we know what the hotel or the cruise or whatever? It's really hard to tell. So to look out 30, 40, 50, 60 years and try to figure out what someone is going to need really is impossible. So what we can do is just the best we can do. And so instead of trying to, pick the perfect policy in order to, number one, pay off the mortgage, maybe handle some credit card debt, put some money aside for college funding. It's great if the death benefit can be used for any of those things. The true intent of life insurance, and this is really important for everyone to know, it's to replace lost income. That's what we're really trying to accomplish. So, when a wage earner is no longer here and that paycheck stops and someone has a life insurance policy, that death benefit coming in does not come in every year as income. It's a chunk of capital that lands on someone's balance sheet. And we utilize that to try to draw from it as much of the lost income as possible. So that's really what we're trying to do.
I mean, I think we've all been slapped in the face recently and shown, yeah, you don't know what's to come even tomorrow. So I can see why planning, 30 years ahead from now is definitely difficult. I almost even want to take a step back. And I know, when I was talking to you, break down for me, if you will, the different types of insurance that there are. There's whole, perm, like what does all of that mean?
Sure, great question. The short answer is two major terms, right? So one is term, it's just for a specific period of time, single purpose. Something bad happens, it pays. Something bad does not happen, which is plan A, and then it never pays. And that's the best money we've ever wasted. Just like our auto insurance, just like the homeowner's insurance, umbrella policy, we hope to never have a claim on any of those things. And we'll just pay the premium just in case for one purpose. Permanent life insurance So much information out there, some of it good, some of it not so good, and a lot of misinformation. So really, permanent life insurance is in place as long as, number one, premiums keep getting paid. And eventually you get to the point with many policies, if they're structured properly, a point in time where you may not have to pay anymore, but it does stay in place. So when you mentioned whole life, that is one subset of permanent insurance, right? So you've got permanent insurance as the umbrella term, and then you've got whole life, universal life, indexed universal life, variable universal life. So of those four, they're all permanent insurance. Whole life and all of the universal life policies operate very differently. So just Googling permanent insurance, oftentimes they're talking about the universal life pieces, but they're using the whole life title. Very, very confusing. And that is something I can talk about for days and days and days, so you have to stop me. But high level, it's term, a certain period of time, or permanent. The goal is to have it in place forever so that no matter when someone dies, there will be some death benefit there to go to beneficiaries.
Okay, awesome. And I think, today we're probably going to focus a little bit more on the term component of life insurance, just because the other one, it's like next level, basically.
And for a different purpose. It
Yeah.
is completely different purpose. When someone asks me, hey, Jason, what do you think? What's better, term or whole life? Say, I don't know. What's better, a chainsaw or dental floss, right? It depends on what we're going to be using it for.
Right.
So everything can have its own purpose. Getting put into the same conversation to handle the same purpose, that's where all of the confusion lies.
Right. So they all serve a good purpose, but very different purposes. So we're today talking more along the term levels, and some components of that.
For ease, I think that's the good way to go today.
Yeah. Okay. So if someone has life insurance through their work, would you recommend that they have an individual policy? And the ones that are through work, those are mostly term policies, correct?
Well, mostly, and even if they're not, oftentimes, with a group, typically called group insurance, whether it's life insurance, health insurance, disability insurance, while you are a member of that group, i.e. an employee of that company, that policy can be in place. If you sever ties with the company, or if the company the next year decides they're going to reduce or eliminate the benefits, they could be gone. So they're not necessarily guaranteed later. They are oftentimes guaranteed now. So depending on how much someone has through work, what we usually see is typically 1 to 2 times salary is what comes along for the ride with the group benefits. Oftentimes employees will have the ability at open enrollment to buy up additional insurance. And some great advantages. Usually, number one, it's either paid by the employer or it's very, very inexpensive. And number two, typically it is guaranteed issue. So regardless of health, people are able to get it. So those are really 2 really big advantages. That's really where the advantage list ends though. So as I said, if you leave the company, if the benefits change, you may find yourself without coverage. Now, let's say you're with the company for a long, long, long time. And so the life insurance is in place for a long, long, long time. How much is it? And what is the appropriate amount to have? So while we don't know what someone is going to need, there is a dollar amount that someone is entitled to. And, it's rarely spoken about, but we have this concept called human life value. So, we can't necessarily get all of the life insurance that we want. Right? Even if we're ready to stroke the check, depending on our age and our income, there's a limit. There's a maximum that the general life insurance industry has, and it's our human life value. So it's not emotional, it's not sensitive, it's a function of our age and our income. So you take someone, for example, in their mid-40s, call it 20-ish years of expected work ahead of them, 20 times their income, that's their human life value. So someone making $100,000, 20 years, that's $2 million. That person could not purchase $5, $6, $7 million of insurance, even if they wanted it. They can qualify for the $2 million. That's what they're entitled to.
Right. I tell you, I think I need to increase my husband's because he's been doing the homeschooling. His life value has drastically increased right now. Just, I mean, his value as a teacher.
Absolutely. Teachers, we've had respect for teachers for quite a while. They are absolutely superheroes.
Right?
That's who.
And
Yeah.
he's been handling it all because I've been working nonstop. So his human life value, it's way up there.
It's through the roof. Absolutely.
All right. So should a non-income earning spouse get a life insurance policy, or is it only really geared for someone that is earning a paycheck?
Wonderful question. So while we said the goal is to replace income, even if there's a spouse partner that is not earning an income, notice I didn't say not working. They could be working 5 times as hard as us, but maybe not having a paycheck come in. Still a really good argument to be made that they should have life insurance as well. Chances are, if something happened to my wife, I don't think I'm going to work tomorrow or next week or next month, and I'm going to be with my kids. And so my income will go down as a result of something happening to my wife. And that's typically what happens. Now, she also earns an income. So there's a calculation to be had there. Whether there's an income or not, it really is prudent for both spouses, both partners, to analyze and have someone help them really through that process to see what the proper amount, if anything, is.
It's kind of like, the marriage advice my mom gave me. She's like, it's not your income anymore. It's not his income anymore. It's both your income. And you wouldn't be able to earn that income if you didn't have his support. And how much value does that have? You can't really quantify that. But I know it's for sure there when you have a partner that maybe isn't earning that income, but is the support system. And so
I'm sorry.
Yeah, so that just shows and reaffirms what you're saying is definitely needed.
Very well said. And the life insurance industry agrees with that. And so while there's a formula for how much someone can get, a multiple of their income, even a non-income earner is able to get half of whatever the wage earner is able to get.
Oh, wow.
So life insurance immediately knows there is value to the entire partnership.
Oh, that's interesting. Okay, so that's how they kind of calculate that, is they take what the earning person could get, their max, and divide it in half, and that's what the non-working, non-income producing
Very good. Yes.
spouse would get. Yeah.
Absolutely.
Okay. All right. Excellent. So let's talk a little bit about some of the other components of insurance. We said they're the basic two, but then there's also a disability insurance, and what exactly does that cover?
Great question. And then let me tell you, disability insurance is probably the most underutilized, but highly important, vital pieces that we need as part of our overall financial plan. People that come into my office, we're learning all about each other. I oftentimes find that there's some amount of life insurance. They've taken it upon themselves to purchase some. Hardly anyone has ever had the conversation about long-term disability insurance, short-term and long-term. Now, short-term typically covers the first 90 days. Someone is out of work because of an injury or an illness. This is exactly what disability insurance covers. It covers the paycheck for the amount of time someone is out. With group, if you're lucky enough to have disability insurance through your group, oftentimes we see on the short-term side, this is not all the time, but oftentimes, short-term side, somewhere between 60 and 100% of the income will continue to reach your mailbox for the amount of time you're out. After 90 days, sometimes after 6 months, depending on what the policy states, that's when the long-term disability kicks in. And it usually covers 60% of base salary. So you have a $100,000 wage earner, they're making $60,000 in base, typically $40,000 in this situation in bonus, equaling $100,000. Something happens to them, they might be under the impression they're going to receive their 60% of their total income, which is 60 grand. It's not. It's going to be 60% of $60,000 in that example. So supplemental long-term disability insurance absolutely needs to be discussed. It needs to be analyzed. What will happen? What will their overall lifestyle look like if they take a 40% minimum decrease in income for an extended period of time? So, just like life insurance, there's a dollar amount that's a limit. Same thing with disability insurance. We cannot protect 100% of all of our income. While the group will handle 60% of salary, we can get a supplemental individual policy, which can get us to, call it 70-75% of total income. So that's really what we want to try to accomplish.
And a lot of, if they're offering, life insurance, a lot of companies also offer disability insurance, don't they?
Yeah, so that's where the group insurance on the disability side would typically cover the 60% of the salary.
Okay, so this is talking about an additional amount, because that usually isn't, because let's just say you're out of work, you're disabled, and you have to look at, okay, what are the reasons you're disabled? Are you going to have a lot of medical expenses, other higher expenses? So now if your income's only off of that 60%, but your expenses have gone up, that's the importance of having that additional coverage.
And that's why it needs to be discussed with everyone. People need to understand the risks that they're taking on, even if they don't recognize, they're not aware of them, it's not on their radar screen. No one's ever brought it up to them. So bringing it up, having that conversation, now people have total information after a conversation about this with which to make a really good, well-informed decision going forward.
And it's kind of along the lines of, should you not need it, it's the best money, that you've never had to use.
Exactly right. We'd prefer not to ever have a claim and not to ever be disabled. We are worth much more alive and continuing to work throughout our career than having a claim. Now we're better off having these policies in place if one of those triggering events happens, the illness, the injury, the premature death. If any of those things happen, we can't prevent any of that. We can't prevent the hurricane, the flood, the stock market crash, the tax law change, the medical issue. We can prevent the financial devastation that hits a family as a result of those events if we handle this in time.
And we're kind of, luckily we haven't had the impacts here as gravely, at least not at this point as in some other areas. But if you've been hit with the coronavirus and you're now out of work and in the hospital, let's talk a little bit about how it's playing with our current situation. So if you have disability insurance and you are hospitalized, with anything but virus included, does that cover you?
It does. It would have to be something considered some kind of underlying health event, health situation that somebody has, some kind of condition that on the front end of the policy would had to have been excluded. Someone with heart disease, maybe they can get coverage for long-term disability if it's for anything except something that's heart related. If there are no underlying factors and nothing written into the policy as an exclusion, then yes, someone is in the hospital for any reason whatsoever. Let's say they're not in the hospital. Disability insurance is going to cover you if you are just unable, and this is what's very important, the definition of disability. You want something that has a true own occupation definition of disability, meaning if you are unable to perform the material and substantive duties of your job, even if you're healthy enough to do something else, then the benefits would still come in. If you have what's called an any occupation definition, it's just as it sounds. If you're healthy enough to do anything, you don't get your benefits. So you don't have to be bedridden. You don't have to be in a hospital. It doesn't have to be a complete, total 100% disability. We want our disability policies to cover us in the event, strictly due to illness or injury, we can't perform our career anymore. That's when the checks start to come in.
Gotcha. Have you noticed in writing any policies during this time frame that they have been adding exclusions specifically for coronavirus?
They have not. I haven't seen anything like that. And a lot of people are worried about their current policies. You know, with a pandemic like this, a global event, would it still pay? Absolutely. And that's also why you want someone on your side looking at these policies, reviewing them, making sure there's no exclusions that either you're not aware of or that you didn't remember. But no, generally speaking, someone gets a policy and then we have an event like this, that doesn't take away any of the effectiveness of the policy. Life
So,
insurance, same thing.
so for both life, for disability as well, um, they would still be able to, get their benefits under the current scenario.
For sure. And then going forward, moving forward with a new policy, should someone be considering additional coverage, a lot of the really strong companies have made underwriting revisions to actually make it easier to get coverage right now, not harder. For instance, if we take Guardian Life, as I mentioned them before, they have actually made it so that in many cases, a medical exam and lab work is no longer required in getting a new policy. Now, medical questions would still need to be answered and someone would need to qualify for that kind of program. But you would think in this time, everyone's going to be more strict. They've actually done their best to make it easier for people to add coverage. And
So now's the time to actually go get coverage.
you know, it's funny you say that. I always think now is the time to go get coverage. And right now, Abby, now is the time to go get coverage. Or at least to have it reviewed, at least have it all reviewed.
Right. Now, okay, so, normally a lot of people ask, should I lose weight, stop smoking? Do I need to change my routine? Will I qualify? Things like that. Obviously, right now, if they've loosened those restrictions, now's the time. But is there anything you want to comment about those questions?
Yeah, the same approval ratings would still probably hold for different builds for smoking for sure. When someone tells me they want to hold off 3, 4, 5 weeks and stop smoking, or hold off 3, 4, 5 weeks and lose some weight and get back to the weight that is their norm, that's really not going to be to their benefit. What life insurance companies will do is they'll look at the average over the past couple of years. When was the last cigarette? If it was within the last 12 months, they're still going to get smoker rates. If their height and weight puts them on the chart for some kind of approval rating, the only way it's going to get higher is if later, if it's shown that it's kept off, if the weight's kept off for at least 12 months after the policy's enforced, then we can revisit and see about getting some kind of upgrade. There's no guarantee to do that, but I've been successful in the past of getting upgrades for my clients even during the policy contract. Once it's in place, the life insurance company can never decrease your rating. You've got that locked in. We can only make changes in the future that are going to be to the insured's benefit. But yeah, they're going to look, if one of the questions on all of the applications is, in the last 12 months, have you gained or lost more than 10 pounds? And if the answer is yes, they're going to utilize that. So it's not as soon as you step on the scale, that weight is off, boom, you get a much better approval rating. It doesn't work like that. So it's always in the best interest to get some kind of coverage put in place now, the best we can do, and then hope in the future to improve it if it's not an absolutely wonderful approval to begin with.
Right. Makes sense. Let's see, I know you had mentioned something that made me want to kick off another question. Not define, but explain some of the differences. I know you've mentioned Guardian, but what are the differences in some of the large companies? And I know, like in all insurance, they're rated. Explain that to me.
Sure, and company does matter. So we have two basic types of insurance companies. We've got stock companies and mutual companies. Stock companies could be highly rated or not so highly rated. Mutual companies, highly and not so highly rated. The main difference is with a stock company, it's just as it sounds. People can go out and invest and they can purchase stock in one of those companies. And now they're a part owner. And for any of these Wall Street companies, their number one priority is stockholder wealth. Do what they can for the stock price, pay the dividends to the stockholders. To the extent there's any money left, then they can make the decision as to whether they are going to benefit some of the participating policy owners. Participating meaning a life insurance policy owner can participate in the profits of the company. So with a stock company, not as robust to be able to participate because they're paying it out to shareholders who may not have policies. With a mutual company, there are no stockholders. So all of the money and the profits that are earned, they can be put back into the company and they can be put into the policies of the participating policy owners. So it's very important. When it comes to permanent life insurance, specifically whole life, I really like whole life, participating whole life insurance with a highly rated mutual company. They've just been shown to outperform. And when I say outperform, I mean have more dollars available to you later to spend and enjoy, as opposed to fewer dollars to spend and enjoy. So company does matter, the rating does matter, the financial strength of the company, and how they're organized, stock versus mutual. Not to say a mutual company is a bad company. They make wonderful products. I write a lot of business with stock companies for the appropriate clients. And for other clients who have a better fit for something else, we're going to look at a mutual company. But everyone, it's so individual, but it does matter.
And at the end of the day, like that's the biggest thing. You can educate as much as you want, but unless this is your field and this is what you specialize in, there are so many nuances. And that's why it's always advisable to seek professional advice. And if, for your specific scenario, have someone run you through the models and really see what are the right plans for you. So is there anything else you really want to make sure that everyone's aware of when it comes to these insurance policies?
Really know that once it's in place, you've got the coverage. It can't be taken away from you, short of fraud that was found on an application or something. They really are what's called bilateral contracts. So someone has a policy. It is the insured's power to decide whether they're going to pay or not pay the premium. As long as they're paying the premium, then the insurance company can't take it away from them. They don't have that power. Now, if the insured decides they don't want to pay anymore, they have that power. And now that takes the insurance company off the hook, of course, but it's only on the insured's decision, not the insurance company's decision. So it's great to know that we do have the power as far as people.
And one thing I think I remember you explaining to me when it comes to like disability insurance is, well, if you're out of work and you're disabled and your finances have gone down, it's hard to maintain your policies. Like that's kind of the last thing you want to pay for. And so I remember you mentioning to me that there are certain companies, more so than others, that if you are disabled, you don't have to pay into the policies. I think I remembered you.
Yeah, you've got that mainly right. Not necessarily the company, it's the policy itself. If it has something, a rider, and by the way, our industry loves to have our own language, right? A rider, R-I-D-E-R, is just an option. You go to buy a car, you can pick all the options. You buy an insurance policy, they call them riders. So a rider on a life insurance policy, a very common one, is called the disability waiver of premium. So if someone is out of work because of an injury or illness, one of the first things people cut out of their budget when their income just went down and their expenses just went up is their life insurance policy. Oftentimes at the most crucial time to have it.
Right.
So if we have disability waiver of premium, the insured no longer needs to make that premium payment. The insurance company pays it and keeps it in force for them for the duration of their disability.
While they're disabled. So you can't get dinged for not being able to pay it while you're on it.
Correct. As long as you've elected to have that rider added on at the very beginning. I want all of my clients to know about that and at least have an insurance company say whether they're going to approve it or not. And then it's the client's decision. But I'm usually pretty strong about wanting them to have it on. It's for such little money to take all of that risk off of their shoulders.
Yeah, I remembered you harping that into me when we were discussing that and the importance of it. And again, it just shows why you want to have someone who really understands all the intricacies of these. Just, like in my field, we have addenda. I want to have someone that really understands all the extra little nuances and addenda and components
I'm coming to
that
you to explain. I don't know what that is at all.
so everything that really goes into it and all the little details, it's really important to have someone in your corner that really understands, what they're doing and can really guide you through the process. So thank you so much for your time. I really appreciate it. I love hearing you always break it down for me so simplistically. It helps. And just, continue to wish you well during these crazy times. And thank you again.
I wish the same to you and your family, and I thank you.